led by Alia ji, Katrina ji, who are investors in these companies. And if the company has such legendary investors, of course, they are going to win the influencer game. Hi everyone, welcome to today's video. So let me start today's video by telling you a very short but very important anecdote about Wipro. So if you take a look at this particular chart, what you will see is that back in 1999, Wipro was trading at roughly 25 rupees. Then just before the dot-com crash, the stock price jumped to roughly 350 rupees. And after the crash, it hit 38-39 rupees. So it lost almost 80-90% of its value. But since then, if you would have held on this stock, it would have given you massive return, massive run up until even 700 rupees. So the point of this story is fairly simple. If you identify some resilient tech companies that are able to survive bubbles and keep your investment intact in them, they can end up giving you massive returns. So that is the precise topic that we are going to discuss today, that there are certain opportunities in the market right now when some of the biggest IPOs in tech have been launched last year. All these companies' stock prices have fallen a lot. So we are going to discuss that. Is there an investment opportunity in these companies? I will make part 1 of the video today where I will discuss 3 specific stocks. These are the stocks: Paytm, Zomato and Nika. If there is enough interest after this, I will shoot a part 2 where I will speak about companies like PP Fintech and also Nazara Technologies. So let us get the video started and let me put out 2-3 disclaimers first. Point number 1, I have not invested in these companies yet. Number 2, I am looking very closely because I want to invest in at least one of these companies because I feel that if my bet survives for the next 10 years, then this stock is going to give me really high returns. Number 3, this is not an investment advice. I am just simply having a discussion with you. I will seek your opinion also. So do comment below what do you think about my analysis and add further viewpoints so that other people watching this video also get benefited. Also, please pause the video and like the video. That will help out a lot from YouTube's algorithm perspective. So the first stock that we are going to talk about today is Paytm. It is one of the most talked about companies now because it is shedding a lot of its value. And if I show you the pricing chart, you will feel a little bit jittery. So the stock opened at roughly 1560 and since then it has mostly gone down and now it has lost more than 50% of its value. So is it the right time to buy? Should you be looking to buy it? Should you be waiting for more correction? What is it that you should be doing? So let us quickly talk about it. So point number 1, and there is an important graph that I would want you to see, and please zoom out and check. If you look at the market share for Paytm, you will get super impressed. You will see that, okay, in terms of payments bank, Paytm has 17.1% market share. Wallet 70%. Paytm for FASTag 28%. So it seems like that Paytm is building a monopoly across different work areas. But here is the problem, that Paytm actually started out as a wallet, but unfortunately the wallet business is not very profitable and its market share is getting somewhat eroded because you have companies like Google Pay which is taking away market share from Paytm. So therefore Paytm is focusing on other lines of businesses. This becomes clearer if you check the recent financial report from Paytm. So let me take you through it and just take a very quick look at it. So there are a few key things that you will notice. One is that if you check the number of loans disbursed or value of loans disbursed, this business line has grown quite exponentially from 0.9 thousand crore to 4.4 thousand crores. There has been exponential growth in the loans business. So this is where the focus of Paytm is. So I will speak briefly about it in a minute, but let me talk about 2-3 more key points. So the first point is regarding GMV. So you will see that Paytm is highlighting a lot that hey, our GMV grew from 112,000 crore to 250,000 crore and we have become like a brilliant company, etc, etc. So let us understand what this GMV is. Now here they have defined GMV as the total payments made to merchants through transaction of our app. So if merchants are using Paytm's app, how much in total are they transacting? That is what GMV means. So please don't get impressed by the figure. The more important figure has been hidden. So the more important figure is, okay, great. A lot of money is flowing through your app. No doubt about that. But how much money are you keeping it at the end of the day? That matrix has not been highlighted. And that matrix precisely is called as the take rate. So I dug up what the take rate is. Take rate was 0.39% in September quarter and now it is 0.4% in December quarter. So what this simply means is that, okay, fine, you are building more and more business, but your profitability is not improving. And this is again reflected in the recent result. And this is what the recent result says. 197 Communication, that is the Paytm's listed name, has incurred a loss of 780 crore from December quarter compared to a loss of 474 crore. So this is something that they have not even highlighted in the chart that I had outlined earlier. They have just talked about the growth matrix. They are not talking about the losses that the company is facing. And this is a critical issue. So there are three specific issues that I see with Paytm. So number one is the take rate issue, which I have already discussed. Number two issue is that the company is now focusing and turning into an NBFC, and that is where its focus has been. What is an NBFC? So you can think something like Bajaj Finance. So Bajaj Finance is one of the leading NBFCs in India. It is one of the most profitable NBFCs in India, and it is an NBFC that does a lot of risk management. In fact, entire Bajaj Finance strategy has been built on risk management. I dug up an interview from 2018, and here is a small clip for you. Please listen to this section very, very carefully to understand about the NBFC business.
Would you believe that high rates are not a thing which will come off very, very soon?
So look, we remain in the business of risk, not in the business of lending. If risk is not representing a risk to us, or our risk matrix and risk ratios are not representing a risk to us, the opportunity is very, very large.
So through this interview, it is very, very clear that Bajaj Finance is laser focused in terms of lowering its risk. On the flip side, we have Paytm. Paytm has recently gotten into this NBFC business. It is amping up. So I showed you the data about the number of loans and the volume of loans that has been dispersed. And it was very clear that this business line is growing, at least in terms of volume. But the question is that, hey, can Paytm do it sensibly like the way Bajaj Finance has done? Now, unfortunately, my answer right now is a negative, that I don't think that Paytm is in the game of risk mitigation. There is a lot of pressure on Paytm to generate profits and expand at any cost. And getting into NBFC business, I don't know if that is profitable or not, but I'll wait for profitability. That's point one. Point two, if we do a more systematic analysis, here is the breakup of NBFC like Bajaj Finance. And what you will see is two things. One, you will see that Bajaj Finance is a highly diversified business. They are giving different categories of loans. Point number two regarding Bajaj Finance is that if you take a look at consumer B2B auto finance sector or mortgages sector, what you will see is that these are secured loans. These are not unsecured loans. So in Paytm's case, it is yet to be seen that what percentage of loans are secured versus unsecured. My sense is that at least to the people that they are giving these loans, these would be unsecured loans. So it increases the risk profile for a company like Paytm. I will have to double check this information, but if you have the information of secured versus unsecured for Paytm, do comment below. I will love to read. Now, additional point regarding the loans that Paytm is giving out, the only pitch, and here is the pitch about Paytm's loan disbursement strategy. You can see the advantages of using Paytm business loan. They are simply playing on convenience that, hey, link your mobile wallet, get loans. And honestly, people are okay in terms of doing a little bit of scouting and shopping around in terms of getting the best loans for themselves. Convenience is super attractive for consumer loans. And therefore, I was saying that it looks like that Paytm is giving a lot of unsecured loans. So please keep that point in mind that even the business within Paytm that is growing, it looks risky. It is still a massive loss-making company and the losses are not getting abridged as of now. Now, the final point or the final reason why I don't like Paytm much is the shareholding pattern. So if you actually take a look at FII DII holding, the FII holding is 9.36 and DII is only 1.08. DII holding is much more prominent than FII holding, especially for startups, because FIIs can be early investor also who have not sold their holding for some reason, or they have already liquidated some of their holding and have made money on it. So there is a very high likelihood that they might have already capped their downside. So this is a very important point. Please keep this simple point in mind that FII, foreign institutional investing holding, in case you don't know what this means, that I had shot very recently, please go and watch it and then watch this video. So the FII holding is okay, but DII holding is very less. It does not generate any trust in the business as of now. Anything good that is happening with the company? So yes, the advertisement spent as a percentage of total sales has been going down. It means that the company is trying to at least become profitable, which is a very good sign, no doubt about that. Let us wait for the profitability to kick in, or at least have a very clear vision why this company will become profitable. Then we could consider taking more positions. So in case we think that Paytm can actually become the next Wipro, so to say, it can survive the recent turmoil in the market and probably another turmoil that might come in one of the next 10 years. So there are three questions that I will ask before making a final call on whether I should be investing in Paytm or not. One, can it survive for the next 10 years? I don't know, because the stock has lost 50-60% of its value already with no clear profit in sight. I would not be surprised that if it further falls quite a lot. Second, can it become an industry leader in the next 10 years? Don't know again because we don't know what industry it is actually focusing on. Previously, it was focusing on wallet. Now it has started to become an NBFC. Now, of course, if its NBFC business picks up, if it becomes like next Bajaj Finance, etc., then why not? We will go and take positions in it. But at least as of now, there is no indication as to why this will become an industry leader. So this is also a cross. Third, will it be making money? Will it be making sustained profits? Again, the answer right now seems to be a no. There is again no vision or indication why this will happen. So I will avoid Paytm as of now. Now comes the second stock, which is Zomato. So let's have a very quick conversation on it. It got started at 126 roughly 10 months ago. And now it has lost and it has come down to 79. So still good 40-45% money lost in this stock already. In fact, if you check it from the top, it is down by roughly 50%. So good correction has already happened on this stock. Does it mean that we should be purchasing this stock? So let us have a very quick discussion. Number one, let us understand the business. The moat of the business is food delivery and it has roughly 45% share in the online food delivery space, which is definitely a monopoly. No doubt about that. At least the industry focus is very, very clear and to the point. Another key related point that we need to understand here is that where is the company focusing right now? So its delivery revenues are 75%. Its hyper pure revenues are roughly 10%. I will talk in a minute what Hyperpure is. Its advertisement revenue are roughly 12%. So it is trying to diversify its business line and it is gaining good traction in it. No doubt about that. This is a good strategy and they might make these business verticals also thrive and profitable. Now there are three more points that I like about this business right now. So let me just very quickly take you through it. One is the Hyperpure model. It's working really well. At the time of launching IPO, Zomato story was being played at that, hey, Zomato has like a lot of data. It will eat into the business of other restaurants also. It will kill its own ecosystem. That in business term, it's called as eating your own ecosystem. If Zomato uses its data to kill other restaurants and become a monopoly of restaurant itself, it will lead to a lot of cannibalization. At least by looking at this Hyperpure story, that is not what Zomato is doing. And if it decides to grow its Hyperpure business model, that cloud kitchen model that everyone was talking about, that hypothesis would not work out. So let me explain why. If you take a look at Hyperpure, what does it do? So you go to FAQ. Hyperpure is Zomato's supplies platform for restaurant. It allows you to purchase. Basically, restaurants have a lot of requirement. So Zomato is integrating that supply chain for them. So they will act as a sourcing channel and distribute it to different restaurants. So it has no intention of killing restaurant, and that's a good sign that they are making the ecosystem thrive. It is not eating its own ecosystem. So please remember that this is a good move by Zomato and it can actually become a market leader in this Hyperpure category. Of course, when it comes to tier 1 type of hotels, they will do their own sourcing. They would have no issue doing it, but there will be a lot of cloud kitchens. There will be a lot of small restaurants that source not in bulk quantities. So Zomato can actually step in and add real value to these restaurants. So this is a good move as per my understanding. Now, the next point that I like about Zomato is that it is moving towards profitability, and this is a very good sign. So you can clearly see from this particular chart that the net advertisement spent as a total percentage of sales has been going down. It simply means that their advertisements are becoming much more effective, which is a great sign for a business like Zomato, which is trying to create a network effect. A related point here is that Swiggy and Zomato have come together and they have stopped doing massive discounts. This is bad news for all of us, a moment of silence probably. This is a good business move from Zomato and Swiggy both. Will they announce it to the world? No, but this is something that you can clearly infer. This point has been confirmed by Sagar Daryani, who is the chief executive of Wow Momos. He has categorically said that earlier the aggregators were pushing the habit of creation of deliveries, but now the habit has been created. They too have realized that deep discounting is not the way forward. If you read a lot of commentary on this, you will see several viewpoints that the discounting has been discontinued. Even you can go and check it on the app. The amount of crazy discounts that we used to get a few months back, that is not there anymore. What has this led to is that in this quarter, it has improved the profitability of Zomato. And this is what the current data says, that online food delivery giant Zomato has consolidated losses. It means that it has brought down its losses sharply to 63 crore. Last year, these losses were 352 crores. So to cut the long story short, Zomato is moving towards profitability. Now the final point is around shareholding pattern. If you check the shareholding pattern of FIIs, they have increased it. So DIIs have not cut their holding in the last quarter. So this is a good sign for the business. So now you will say that Akshat, earlier you used to make joke of Zomato and you used to say bad stuff about Zomato. Now you're saying good things about Zomato because you are turning an investor in Zomato. No, I'm not turning an investor in Zomato because if you check some of the recent moves made by Amazon is also trying to build its business in the food logistics space. Same goes for Reliance, and here is the article. So the point of this discussion is that this space is still very nascent, but yes, Zomato has improved. There is a very clear sign. So should you go and invest all your money in Zomato now? No. But if we run Zomato through the same framework as I ran Paytm through, then it will help us make a concrete decision. Number one, do you see Zomato surviving for the next 10 years? My answer is towards positive, that yes, there is a very high likelihood that it will survive. Question number 2, will it become an industry leader? Yes, most likely it will become an industry leader. Even if Amazon comes into the picture, there will be major 3 or 4 players that will exist. There is a very high likelihood that Zomato will continue to lead the market at least. Can this firm make money or profits? The answer again seems to be yes, because they are on that path of profitability. Will I be investing any money right away? The answer is no. I will see some developments and then I will start taking some positions, but this stock is definitely on my list and I'm much more confident about Zomato than Paytm. If I have to take positions in one of these stocks, it would be Zomato. Now let's talk about the third and final stock for today, which is Nika. Now I will not get into excessive details of Nika because I've already made a separate video on Nika's business model, so you can go and watch it to get a better understanding of what Nika does. But to cut the long story short, Nika sells beauty product through an influencer-led game led by Alia ji, Katrina ji, who are investors in these companies, and if the company has such legendary investors, of course they are going to win the influencer game. And that is one of the reasons why Nika got some crazy valuations. This was reason number 1, and reason number 2 for getting crazy valuations right at the start itself was Nika was a profitable company at the time of launching the IPO, which was a rarity, and therefore it commanded premium valuations. But unfortunately, from approximately 2350 rupees, it has fallen down to 1499. Lot of loss already happened in the company. Should you go and invest? Let us try to understand that basic story. So number 1, the stock was already highly overpriced to begin with and it has corrected. That is point 1, because it was getting super rich valuations. Point number 2, the recent results are not very encouraging. For example, take a look at this snippet. It clearly says that in the December quarter, that consolidated net profits were at rupees 29 crore, down 57.87% compared to 68 crores. Okay, so the profits have roughly been cut more than half. Now the reason that has been given to justify this result is also not completely agreeable as per my understanding. They are saying that, you know what, due to lockdown COVID, people were not wearing makeup because they did not have to go outside their house. I do not buy that story. It is like dog ate my homework story. Now why is that? Because when people do Zoom calls also, boys are also wearing makeup, girls are also wearing makeup. I don't think people have stopped wearing makeup. There are like new breed of influencers that have come up that keep on putting makeup. So there is no end to this, and I don't think that that is a valid reason for the stock fall. Please take this statement as a joke and an analysis. Please don't get offended by it. Honestly, this is not a just reason in itself. Now, of course, this can be debated. Some people will say that, you know what, reasoning is right. It will come back up, this, that. But here is the third and the most worrying sign about this company right now. You can check this from the article that Nika insiders have offloaded 19 million in stocks amid sell-off. Not a healthy sign. And who are these sellers? So these are Chief Technology Officer, CEO of Private Labels, Reena Chhabra, CEO of Nika Man, Vice President Neha Grover. They have all cut their holdings. Now, is this something which definitely signifies some kind of malpractice? The answer is no. So let me issue a very quick clarification here. There are equities and stock options that are issued to employees. There is nothing new in that. But here is the problem, that all these people are insiders. They know what is going within the company and they themselves are not trusting the stock. If they had a lot of faith in the stock, all these big names within the company would not have cut their holdings. So at least this does not make me feel very comfortable in terms of investing in the stock. So I will stay away and I will not do further analysis. But just to complete the loop, Nika is in an industry which is highly profitable. Nika has built a very good brand. It is playing the brand game. It is expanding its store. It is doing a lot of good, useful things. But here, out of all the 3 stocks that I have spoken about, the valuations are still at a very high price as per my understanding. So therefore, I am not investing. But yes, it has the potential to survive for 10 years, can become an industry leader, is already profitable. All the check marks are there, but the valuations are still quite rich for me. So I will stay away from Nika. So in summary, what did we speak about? Number 1, we spoke about the fact that if you identify some really good tech players early in the game, bet on it. And if those companies are resilient, if they can survive tumultuous time, word of the day again today is tumultuous. So please go, let me know what does that mean. So if you identify companies that are able to handle tumultuous situation and come out of it, And if they survive for 10, 15, 20 years, then they will give you massive, massive returns. If I have to put my money today in one of these three companies, it is Zomato, but again issuing the clarification that I'm not putting my money in Zomato also as of now. I will read all of your comments, revisit Zomato, and then I will make a call when to take some positions in it. I hope you enjoyed the video. Let me know if you would want me to do part 2, and I will see you the next time.